We have been programmed to think that if you don't have 20% saved up to put down as a down payment on a home, that you simply shouldn't buy that home. That it's only smart to do once you have that 20%. But tell me, how long does that really take in today's world to save that kind of money? $500,000 home? $100K? It's not gonna happen. It's a tall task most people can't do, but there are still plenty of options to be able to purchase a home. But say you have that 20%. I'm here to tell you that smart home buyers should never put 20% down to purchase a home, even if they're able to. And for the people who can't put 20% down, I'm gonna explain why it's still smart to purchase a home with little money down. Before we get into that, welcome back to another video on my channel. My name is Caden Anini, loan officer in Phoenix, Arizona. You can follow me on my other socials at Millennial Loan Officer, and I'm happy to be sharing yet another piece of info to help you in the home buying process and the overall mortgage process. Please remember to hit that subscribe button so you're not missing any videos of mine. If you check me out on Fridays, I put market updates out every Friday, touching on the market and what's happened that week. Would love if you're never missing a video and getting all the information that you can in the mortgage world. And also hit that like button so that we are being shared to more and more people getting important up-to-date information. Let's dive in. Now to kick this off, let's talk about the people who have that 20% down, the benefits behind not putting 20% down. First off, it's an obvious one. You're gonna have more cash in your pocket if you're putting less money down. But let's think about the overall potential of your money. If you're putting 20% down, your money's only gonna grow at the value of the home. Let's say you put 15% down. You can put 15% down on the home and the home's still gonna grow at a certain amount. You could take that 5% and go somewhere else in the stock market, potentially getting more growth on your money. It's the idea of trying to work smarter and not harder and letting your money work for you. If you're putting all that money into the house, the house is only gonna grow a certain amount. But if you're diversifying your money's working for you in different areas and creating a potential higher return on your overall investment. The second point I have is on mortgage insurance, and it actually ties back in to point number one. So let's say you're putting 17% down. It's not that 20%, but you're gonna carry mortgage insurance with it. Everyone thinks that mortgage insurance is this big bad wolf and that you shouldn't have it and it's wasted money. Not true. If you put 17% down, your mortgage insurance might only be like $40 per month. Yes, you have an increased payment, but over the course of 2 years, that overall extra cost is probably about $4,000. But let's say on a $600,000 home, because I had a client in the same situation I'm talking about. On that $600,000 home, putting 3% less down, saved him about $18,000 in his pocket. Let's say you're gonna hold mortgage insurance for 2 years before you refinance or do anything like that. The extra cost of holding that mortgage insurance and that little higher payment is about $4,000. So if you look at it and go, okay, I saved $18,000 on my down payment. Over the course of 2 years, I'll pay $4,000. You're still left over with $14,000. Now here's the kicker. Homes are expected to increase in prices about 3%. So you could expect another 3% in equity over time. Well, if you put 17% down and your home's gonna appreciate by 3%, you're gonna get to that 20% mark. Well, you'll be able to drop off mortgage insurance. So you'll be able to get to the point that you wanted to already by just waiting a year to 2 years, and then you're saving $14,000 in your pocket that you could potentially use for the home, or you could use and put into the market, and that $14,000 will grow at a different rate than what the home grew at, and you're maximizing your total investment. I see mortgage insurance as leverage. And the last point I have for you is something that's not talked about a lot, but you actually get a better rate for putting less money down. So let me explain. When you get a conventional loan, there's loan level price adjustments that come with different factors of the loan. When you put down 20%, it comes with a certain cost to get a certain rate. That's a little adjustment to that qualifying rate. They actually promote people putting 15 to 19.99% down on a home. You actually get a better qualifying rate when you do that. So you're able to take advantage of everything I've already talked about. You were basically able to save money on closing costs because the rate for putting less money down is a little cheaper. That's ultimately what loan level price adjustments are, and another benefit of putting less money down. These are little things most people aren't talking about. This is a high level way of thinking and creating more money and more income potential for yourself. This is how we need to talk about purchasing home versus avoiding mortgage insurance because it's wasted money. Now going back to first-time home buyers. Don't feel discouraged because you don't have 20% down. Now here's the funny thing about the housing market and getting a loan. Say you put 3% down on a $500,000 home and someone else puts 20% down on a $500,000 home. Both homes go up 3%. You both have made the same amount of money for putting less into it. Yes, you may have a higher payment, but if you don't have that money to begin with, you're able to make more on your money. You've just doubled your money where they need to get 20% back to double their money. That's the power of leverage and getting a mortgage for a home. And on top of that, there's plenty of programs where you can go as low as 0% through a USDA, VA, or getting down payment assistance. And then there's programs where you can get as low as 3 and 3.5%. You don't need a bunch of money to purchase a home, but start thinking about how you can make that extra $15,000 that you may have in the bank work for you. And potentially over 2 years, you could double your money. When I work with first-time home buyers, I always suggest putting the minimum amount down. That way your money's working for you, and then if you have extra money past that down payment, you're able to keep it for expenses that come with the home, decorations, things go wrong with the home, you're prepared for it, and you're not strapped for cash. And lastly, I have an overall statement when it comes to larger down payments. I want you to think about this. I think your money's more at risk when it's in a home versus outside of a home. The market's gonna move however it wants, whether it's up or down. And people realize the same amount of equity gains whether you're putting 3% or 20% down. Keep that in mind. If all of your money is getting put into a home, you're at the risk of just the housing market. If you're able to put 5% down and move your money somewhere else to be invested elsewhere, you're able to diversify and you're not strapped to exactly what the housing market does month in and month out. Over the long term, you're always gonna win in housing, so why would you sink all of your money into it and wait for that market to go up? I know I caught you all off guard by going against the norm and saying that we shouldn't be putting 20% down. You can't always think the lowest payment is the best thing for you. You have to look at the total financial picture. What might happen in the next 3 to 5 years of owning a home? Look at all of this, where else your money can be put. Hopefully I opened up your mind when it comes to down payments on purchasing homes. Thank you for watching yet another video on my channel. Please share this video with anyone you think this might benefit. This needs to be put out to anyone potentially purchasing a home, currently purchasing a home, showing them different ways of thinking and what's the best use of their money. Thank you for watching this video. Please hit that subscribe and like button so we can be broadcasted to more people. And if you have any video ideas or you have something that you want me to touch on, please drop it in the comments. I would love any feedback I can get about making certain videos, and you can send me an email directly. I'll have that below as well. But thank you again, and I'll see you in the next video.